Have you ever believed so much in a company and wished you could invest in its stock way before it went public? I'm talking about the likes of Airbnb, SpaceX, Nikola Motor Company, and Apple Sciences. The good news is that you can do this through secondary marketplaces. Secondary marketplaces such as EquityZen allow you to invest and sell shares of private companies way before they actually go into public offering. We have to remember these secondary marketplaces come at a great level of risk. So you have to remember to always do your own due diligence and homework prior to committing to any investment decisions. EquityZen has a minimum investment amount of $10,000 and you need to be an accredited investor prior to starting investment in any of the private companies. On the plus side, it offers you a wide selection of investments and you will have the option of investing in some of those disruptive private companies way before they are publicly offered and before their valuation skyrockets. In terms of the cons, there is a relatively high minimum amount of investment and also EquityZen charges a rather high 5% fee for any of the amount invested. Assuming you decide to invest through EquityZen in order to have access to the secondary marketplace, first you need to be verified with them as an accredited investor. And this often occurs through completing a couple of forms. Then you can have access to a list of companies and express your interest to be part of them. EquityZen would then source these shares and confirms when they are available for investment. And eventually, EquityZen would enable you to have exposure to that private company through EquityZen Investment Vehicle, also known as EquityZen Growth Technology Fund. And in doing this, you would in fact be fully vested in that stock for the company that you have desired or chosen to be part of. This graph shows how value creation from the year 1986 up to 2018 has in fact shifted from public markets, which basically is displayed in green in this graph, to the private markets, which is displayed in gray color. As I indicated before, companies are in fact staying private for a longer period of time, and using the secondary marketplace, you will be able to tap into this potential investment pool and invest in companies that you really believe in and would be the disruptors of tomorrow. On average, for example, back in 2004, companies typically went public after 4 years, whereas today that average sits at around 10 years or more. So you might be asking, how does EquityZen source these shares? In fact, they source these shares from either the current or former employees of those private companies, as well as some of the early investors and advisors of the company. The reason why these people are perhaps selling those shares or portions of their shares is because of various reasons. It could be because they want to cover maybe some associated costs related to tax purposes, or maybe because of the changes that has occurred in their life circumstances. Whatever the reason, EquityZen tries to source some of these shares and then channel it through their secondary marketplace for those investors who are potentially looking for investing in those private companies. And the way that they price the shares of those companies during the time that they're still private is through using the basis for their last financing round. So the valuation for the latest financing round will actually be used as a benchmark to determine the share price of that private company. The duration of holding an investment with EquityZen will in fact depend on whether the company goes public. If a company IPOs, then what EquityZen does is that they transfer the shares to your brokerage account so that you can either decide to hold onto them or maybe sell them after the lockup period is over. On the other hand, if the company does not go, public or is not perhaps acquired by any other company, you should perhaps be prepared for the risks involved and keep the investment for an indefinite period until some of those circumstances change. Selling part of your shares or shares that you have acquired in a private company could be very difficult. And even when you meet certain, terms and conditions, there is always that 12-month holding period. So you should be prepared when you decide to invest in a private company to basically hold on to those investments for a long period of time and perhaps even forget about them until the time that they eventually go into being a public company. And even then, you will still have to follow some, you know, locked periods before you can start selling the shares in that company.